When we dive into the world of manufacturing, we often encounter a fascinating yet complex aspect of cost accounting, known as joint and byproduct costing. Now, if you're wondering what that even means, don't worry. Today, we're going to break it down in a way that's engaging, relatable, and informative. So, grab your favorite snack, get comfy, and let's explore how companies allocate costs when they produce multiple products from the same raw materials. Imagine you're at a bustling bakery. The aroma of fresh bread fills the air, and you can see bakers skillfully crafting loaves, pastries, and cakes. But what if I told you that every time that dough is kneaded, there's a whole lot of cost behind it? That's where joint costing comes into play. Joint costing is all about those products that share a common production process. Think of it as baking a cake. You have ingredients like flour, sugar, and eggs, but you end up with multiple delicious products, maybe a cake, some leftover batter for cupcakes, and even crumbs that can be repurposed as cake pops. So, how do we figure out how much of that flour and sugar goes into each of those products? That's the challenge cost accountants face. They need to allocate the cost of those shared ingredients to each individual product. Let's say our bakery spends $100 on ingredients for a batch of cake and cupcakes. If 60% of the ingredients go into the cake and 40% into the cupcakes, the cost accountant would allocate $60 to the cake and $40 to the cupcakes. Simple, right? But it gets more intricate when we start talking about byproducts. Byproducts are those secondary products that come along for the ride during the production process. Back to our bakery example, remember those crumbs? They might not be the star of the show, but they can still be valuable. Byproduct costing helps us figure out how to account for these little treasures. In our case, let's say the bakery can sell those crumbs for $20. The cost accountant needs to determine how to allocate that value. If the total cost of making the cake and cupcakes was $100 and the bakery can sell the crumbs for $20, they need to consider how that affects the overall cost structure. This is where things can get a bit tricky. The accountant may decide to allocate some of the joint costs to the crumbs based on their market value. For instance, if the crumbs represent 10% of the total output, they might allocate $2 of the joint cost to the crumbs. This way, they can accurately reflect the profitability of each product and make informed decisions about what to bake more of in the future. Now, why is all this important? Well, accurate costing helps companies understand their profitability. If our bakery knows how much each product costs to make, they can set prices that not only cover costs, but also generate profit. Plus, understanding these costs helps in making strategic decisions about which products to focus on. If the cake is bringing in more revenue than the cupcakes, it might be time to adjust the production line accordingly. But it's not just about profits. There's also a legal side to this. In many industries, companies are required to report their costs accurately for tax compliance. This means that joint and byproduct costing isn't just a good practice, it's often a legal necessity. If our bakery doesn't allocate those costs correctly, they could face penalties come tax time. And let's not forget about financial reporting. Investors and stakeholders want to see reliable financial statements. If a company can't accurately show how much it costs to produce its products, it risks losing credibility. So, joint and byproduct costing plays a crucial role in maintaining trust with those who have a stake in the business. When implementing these costing methods, there are a few key considerations. First, it's essential to accurately identify joint and byproducts. In our bakery, we need to recognize that the cake and cupcakes are joint products, while the crumbs are the byproduct. Next, we must allocate those joint costs based on how much of the shared resources each product uses. And don't forget about separating the byproduct costs. Choosing the right allocation method is also vital. There are several methods out there, like physical units, sales value at split-off, and net realizable value. Each method has its pros and cons, and the choice can significantly impact the financial statements. For example, if our bakery decides to use the sales value at split-off method, They would look at how much the cake and cupcakes can sell for at the point they're separated from the batter. This method might provide a more accurate reflection of the resources used. Regulatory compliance is another crucial aspect. Cost accountants must ensure that their methods comply with tax regulations and accounting standards. This is where a solid understanding of joint and byproduct costing becomes essential. If a company fails to comply, they could face fines or legal issues, which no one wants. Accuracy and consistency are the final pieces of the puzzle. If a bakery changes its allocation method from one year to the next, it becomes challenging to compare financial statements. Imagine if one year they used the physical units method, and the next they switched to sales value at split-off. It would create confusion when trying to analyze trends. Maintaining consistency in cost allocation is key to reliable financial reporting. So, in summary, joint and byproduct costing is a vital part of the manufacturing process, particularly in industries that produce multiple products from a common set of resources. It helps companies accurately allocate costs, analyze profitability, comply with regulations, and maintain reliable financial reporting. For cost accountants, understanding these concepts is crucial for making informed decisions that can ultimately lead to better financial performance. As we wrap up, remember this: the next time you enjoy a delicious treat from your favorite bakery, there's a whole world of cost accounting behind that product. Joint and byproduct costing may seem complex, but it's all about ensuring that every crumb counts. Whether you're in manufacturing, baking, or just curious about how businesses operate, understanding these principles can provide valuable insights into the true cost of production. So, keep exploring, keep learning, and who knows? Maybe you'll uncover the secrets behind your favorite products.